Is there enough going right for stocks to keep going up? Let's ask Greg Branch. He is the founder of the Veritas Financial Group. Our bull, Brian Belsky, chief investment strategist with BMO, is going to be along shortly. The stage, however, Mr. Branch, to begin, is all yours. Is there too much exuberance in this market or not?
Surprise, surprise, Scott. I think so. And look, this is coming from someone who readily admitted that I missed much of the performance in 2023, who readily admitted that on December 13th, when we had the Fed's posture pivot, that even I had to increase my exposure or let I miss more performance. But when we look back at what kicked this rally off, when we look back at all of the fire that was thrown, all the gasoline that was thrown upon the flame, much of that has reversed, yet the market hasn't reacted to that. And so let's talk about the jobs number that came in at 150. We'll talk about CPI core that came in at 20 bips back in October. All those things leading us to believe, or at least leading some to extrapolate, that we had reached a new paradigm. Well, those numbers have reversed. We jumped back into that 30 to 40 basis points of month-over-month core growth for the last couple of months. We saw the jobs number rebound. We're seeing historic low claims again. And so even though we had a posture pivot from the Fed, even that has reversed to some degree, where you have even the most dovish members like Bostic, like Waller, coming out and trying to say, as diplomatically as they can, well, wait a minute, we're not looking for 6 or 7 cuts. We're very clearly saying there might be 3 cuts, and we're very clearly saying that none of that is going to happen on March 31st. And so we once again have a very bifurcated situation where the market expectations are very different than what the Fed has articulated, very different from what the Fed said that they would do. And even the things that I think caused the rally at 22 times, we're just not seeing those things continue, and we're not getting the earnings to continue to propel this rally.
But why are you trying to find bad news in the good? I mean, you can't have it. You can't have it both ways. You can't say, well, we're going to have a recession. We're going to have a recession. We're going to have a recession. And then the economic data remains stronger than you think. And then say, well, now the economy's just too strong. And that's going to force the Fed to keep rates higher for longer, when the evidence would suggest, and the trend would certainly suggest, inflation coming down, growth remains good, the Fed regime is changing, they've made a pivot, they're going to cut. Who cares if it's March or not? Cuts are coming. No more hikes are coming, more than likely.
Well, the devil's in the details here, Scott. And I never use the R word. I challenge you to go back over 2023, because it doesn't matter what we call it to me.
Well, you cited the long and lag effects of the policy. You intimated that that's where we were heading. Come on, let's not get semantics here. We both know what you were inferring.
Of course, and I never back away from what I infer and what I state explicitly. And we do need more slowing. We need more slowing. We can't, as you just said, we can't have this both ways. We're not going to get to a sustainable 2% number at the rate that the economy is growing right now. That's just not going to happen. It has never happened in all of history with these type of financial conditions. And so we do need more slowing. We are seeing some. We are not seeing enough, given that we are still fighting this battle with inflation. I don't think we can call it over. I think the Fed goes to great lengths to remind people that we can't say that it's over. And so I'm splitting hairs a little bit here, Scott, but it's not slowing fast enough for the Fed to have to cut. And it's growing too strongly to say that, yes, inflation will get where we need it to get. Inflation will meet the Fed's mandate on its own.